Close Market Update. First, reminding we're coming up on the FTM Summit on the 31st of May and the 1st of June. I hope to see some of y'all there. It's one of my favorite conferences of the year, and look forward to a lot of great information and answering questions there that I'll be doing a different kind of presentation, more helpful to understand the gold and silver markets and how they work. And so we'll have a good time with that. I hope some of you will make it, and be sure to introduce yourself to me when I see you. So let's get started. Everything's about silver this week. We spent the last 2 weeks talking about gold, and we've seen gold stabilize and start back up while the stock markets had a couple bad days due to the trade stuff going on with China and the U.S. and Trump. So as we continue to talk about, it's diversification. It's not that you have stocks or gold. You have both hard assets and paper assets to blend a portfolio. But that's not what this show's about. It's about silver and where we stand, because I haven't talked about it in a few weeks. First of all, most of the questions came in about the FTC thing with Chilton dying, the guy that ran and denied there was any coercion or price fixing for years. He stood behind that, even though there was overwhelming evidence that there was manipulation in the marketplace of silver, he would never charge anybody with it. So finally, as he was dying of pancreatic cancer, he came clean. And a lot of you saw articles out there. There were a lot of them in the marketplace, but a lot of you saw Theodore Butler's, a well-known, highly respected writer about silver for many years, decades in fact, but he's always shown the proof that there was price fixing in there and manipulation in these markets, but they would never charge, even though he would give them enough information. But finally, Chilton came clean just prior to his death and admitted that there was a lot of price fixing, yet since he's passed away, nothing has changed. But we do know that it's out there, and we do know that short markets were shorted in detail. Once again, it wasn't real silver, it was paper silver. You can go out and take 100 million ounces of real silver and leverage it up 6-8 times in the marketplace and make the price go either way. And certainly we don't talk much about how much silver went up between 2000 and 2012, when it moved up from $3 to over $48, 16 times. But then we saw it go down from 48 down into the 13s, and now it's back to $15 an ounce, and it's still below mining cost. And we know that historically that doesn't last but a few weeks at a time. So now is an incredible time to be buying silver. Why? Because it's below mining cost. We saw the 10 largest miners about 1550 coming out in the first quarter of 2019. We now see a ratio of 86 to 1, with gold being 86 times more valuable than silver right now, with gold at $12.82 and silver at $14.95 an ounce. So yes, you need to be buying silver. You don't want to wait till it takes off and everybody's figured it out, because we know, unlike the gold market, when silver moves, it moves very fast. And you'll see it like you saw it last year when it moved up to the 1650 level before it retreated again. So that's 10% right now. It only went to 1650 and came back. So buy silver and buy it now. And yes, I think the ratio will start cutting. There are some that out there believe gold's going to be 100 to 1, and you can make a case for it through central bank buying, but you can also make a case that we're very near the short buying on silver ending. And when it does, you're going to see silver move back to a 50-55 to 1 ratio from 86. So I'm just telling you now, if gold got to 1,500, which I know it is, and you divide it by 50, that would put silver at 30. That would be a doubling of silver while gold went up 35%. So yes, I do believe you should have silver in your portfolio. I will say it's been disappointing. It's lagged behind what I thought it would do and most other people that deal in this area every day. But now is the time to do that. So if you want to talk about it, we have specials that we're not putting out because we have wholesalers sending us 3,000 of this coin, 2,000 of this coin. So if you call the right date, we can save you 30 to 50 cents on some of these specials we have, but we can't run them. But for purely the investor that is playing the low price, you want to be buying 100-ounce COMEX brands that can be used as collateral in COMEX collateral trading. And we can give you the best deal on those 100-ounce bars, give you the lowest break even on those. Engelhart, Johnson Matthey, and Royal Canadian Mint bars. So give us a call. We can discuss it with you. You can reach us at 800-247-2812. That's 800-247-2812. And certainly, if you want to get into an IRA, self-directed precious metals IRA, we've done hundreds of them. We can be the representative. We can be the broker. We cannot be the custodian, but we can give you some names to do that. So give us a call on that, because if you're leaving an employer and rolling your 401k out, you can set up a self-directed precious metals IRA and a regular IRA where you can have your stocks and bonds. And we're seeing this every month where baby boomers are rolling out and leaving the 401k and setting them up to self-directed IRAs. And we can work with you on that. I do have several questions about things we'll talk about next week about carat gold and the rare coins that we see so much out there now. People are going back to rare coins. Some of what they're saying is true, some of what they're saying is not, and we'll try to address that next week. With this week's Precious Metals Market Update, this is Tom Cloud signing in.